Welcome to All Is On Insights. Today I'll be covering the XRP 589 Riddle. Origins of the 589 Riddle. Stenographers and cryptographers are constantly and consistently enamored by riddles and puzzles. By their very nature, it's appealing to them. So it's no wonder that the crypto space was intrigued and enamored by Bearable Guy 123's riddles that he consistently posted. Most in particular, the one that has gotten the most attention is the 589 riddle as it pertains to XRP. This made its headlines, most specifically, when it made its way onto The Simpsons. Yes, that's right, The Simpsons. Bart was writing the price of XRP as $589 by the end of the year, and this intrigued many as The Simpsons has been consistently known for predicting the future. So, does it have meaning? Well, let's review. A review of Ripple. Before going any further and jumping into the riddle of XRP 589, we have to first do a little bit of a review of Ripple. What is their stated goal and what is their purpose? So let's go ahead and let Brad Garlinghouse speak for Ripple.
Well, we really are in the business of selling solutions, selling technology to banks. Part of that is simply a software sale, and part of that also for customers that want to take advantage of using a digital asset like XRP for liquidity. What that means is instead of pre-funding literally the trillions of dollars that banks have with other banks around the world, they pre-fund that amount that sits there. It's really dormant cash sitting there. With digital assets, you can make that much more real time to enable a payment across a border into another currency in real time.
So as we've just heard from Brad Garlinghouse, Ripple is essentially providing liquidity to central banks and to large banks throughout the world, freeing up their liquidity and providing them with cash on reserves. So let's jump a little bit further now and let's review what is the current state of banking. The current state of banking. In order to understand the current state of banking, we must first go back to the 2008 financial crisis. Well, I'm sure by now you're asking or saying, that was just a bunch of mortgage-backed securities. Well, was it? No, actually, the financial collapse of 2008 was a result of liquidity as a result of bad collateral in the system. So essentially, the banks had a bunch of bad collateral on their books. And in order to clear out cash each evening, they would go to the repo market, and they would retrieve cash from other banks to settle their books. As this was going on and continuing, it got to a place where the banks were no longer lending to each other. They were not providing that overnight liquidity that was necessary for commerce in the banking industry to continue and persist. So as a result of that, it instigated what was called the reverse repo market. This is where the Fed came in and started purchasing up some of that collateral. It got to a place and to a point where the Lehman Brothers was no longer provided liquidity, essentially bringing them into bankruptcy and collapsing the whole entire system. So why is that relevant today? Well, today's current banking system is likewise in a current liquidity crisis. We have over $1 trillion in the reverse repo market, which means the Fed has purchased collateral from central banks and from many of the larger banks, pulling that collateral out of the system where the banks are no longer interested in lending out to each other. We also recently saw that Wells Fargo called in their personal lines of credit. So as we can see, there's existing a credit and liquidity issue among the banks, and this bubble is growing bigger and bigger as each day passes. So essentially this means that the central banks and banks have essentially a liquidity crisis on their hands. They're being bailed out currently by the Fed, but that liquidity crisis puts Ripple center stage for the solution of the century. So let's dive in a little bit deeper onto our next platform and unwinding this Gordian knot 589 riddle, and that is Basel III. Basel III. Basel III was set up by the Bank of International Settlements. They did this in order to prevent another financial crisis of 2008. They provided additional regulatory oversight and supervision for banks to help them manage their risk by classifying their assets in order for them to lend against those assets in an appropriate way. In doing this, in October of 2014, they set up regulatory oversight in relation to net stable funding. What net stable funding essentially did was it provided the requirement for the commodities market to have a one-to-one ratio in their sales. So what that meant is, if you were to have 1 ounce of gold and you were to sell it on the paper market, you had to have a physical 1 ounce available. And so, as a result of this, Basel III then provided disclosure standards in December 9th of 2014. In their disclosure standards, they laid out what was going to be necessary for these banks to disclose publicly about their holdings in relation to this net stable funding. So by now you're probably wondering, what does Basel III net stable funding have anything to do with XRP and liquidity? Where are we going with all of this? Well, on the December 9th, 2014 issuance of the disclosure statements for net stable funding from Basel III, the very following day, Comex had their response to Basel III. What was their response? Rule 589. Let's take a look. Comex Rule 589. So let's review Rule 589, issued December 10th, 2014. Here's what it clearly states. Price fluctuation limits to deter sharp price movements that may, for example, be driven by illiquid central limit order books prevailing from time to time in otherwise liquid markets. So what does this mean? This means that as a response to reading Basel III and the net stable funding ratio, they identified that when a one-to-one ratio in the commodity markets, particularly in the precious metals industry, that they would find that the markets would go illiquid. No one would sell, no one would trade, driving massive price gains. And they had to put in a circuit breaker in order to slow this down. This would create massive illiquidity throughout the whole markets and cripple banks as it pertains to their liquidity. Now with SWIFT in its current state, that means they could end up spending days, weeks to transfer money internationally. Where does this come in for Ripple? This provides Ripple entering into the world stage, and Comex 589 upon its issuance would provide that. So who should we contact if we have any questions pertaining to Comex Rule 589? But not Miguel Valles, the author and contact listed in Comex, who later becomes the chief executive of markets for Ripple in 2016. Any connection? Any correlation? I think so. So, where are we today? Well, let's dive in. Where are we today? So as we jump in and review the net stable funding and its initial issuance on October 31st of 2014, we find one, that its topic was centered around liquidity. Comex Rule 589 was set up and established out of concern out of an illiquid market pertaining to the lack of selling in the precious metals industry. So, as many in the XRP community anticipated and had high hopes for 2018 being the year of them taking the grand stage, we ended up finding that in 2018, the net stable funding ratio rules of Basel III were not implemented because sovereign nations were not ready. So, where are we today with the net stable funding ratio? Well, all but 2 countries, for the most part, have implemented these rules, and that is the U.S., having Comex in the precious metals trading industry, and then also the UK, whereby the LBMA had requested to be removed from the net stable funding ratios requirements. Why? Well, the LBMA, being the world's largest trader in precious metals exchanges, may make sense as to why. But let's go ahead and review what request they put forward. The LBMA states, we expect that 1 or more members would exit these markets or cease clearing and settling transactions. Local London. Currently, there are 4 out of the 4 members would be extremely difficult to attract new participants given the impact of the NSFR. Additionally, they write, it would drain liquidity They say these unallocated balances are the only material source of liquidity in the clearing and transactions of the financial systems. Without this liquidity, there would be material deleterious effect on the global precious metals market. So what does this mean? Well, it means that the LBMA came to the same conclusion that Comex did in December 2014, that implementing the NSFR would create an illiquidity issue in the precious metals trading market, so much so that 3 out of the 4 players would exit the market if such an event were to occur. They could not maintain a 1-to-1 ratio on their physical trading of precious metals, which means we also know that the paper market is likely overinflated and not actualized in its 1-to-1 ratio. So, where does that bring us? Well, we also know that from the BIS that they have identified that there is $517 trillion in over-the-counter derivatives. That's over 7 times their stated GDP for the entire world. So, we see an over-the-counter derivative market 7-fold the world GDP. We see the reverse repo market over $1 trillion. We see the 2 leading precious metals exchanges turning around and saying that there is a massive liquidity crisis if they have to have a 1-to-1 ratio for the gold that they're selling. In other words, one piece of gold physically in a vault to 1 piece of gold that they sell in the paper market. So when we bring all these things together, what we identify is that it seems as though Rule 589, the riddle, is solved. It's a liquidity crisis that Ripple is then issued into the world stage. I may be wrong, but I think this is a clear and valid explanation for what we're seeing. Additionally, we also see numerous times throughout the XRP army that they're anticipating a black swan event to bring on and herald in Ripple into the center stage. So, what else do we see in the most recent news? Palantir. Palantir, being a data analytics and cybersecurity firm who works for the CIA, just turned around and spent $50 million to purchase 100-ounce gold bullion bars. Why would they do this, you ask? Well, that's a great question. Well, their stated reason is that they're anticipating a black swan event. So why does it matter? Well, they also happen to have their largest client being the CIA. So they are an advisory to the U.S. in a national security advisory role, turning around and anticipating a black swan event that will ultimately result in the precious metals market blowing up in such a capacity that they can take advantage of such a situation. So, that's where we are today. Additional thoughts. A liquidity crisis in the precious metals market would ultimately mean that there has been a complete devastation of consumer confidence in world reserve currencies. What that essentially would mean is that you would have the sovereign nations essentially set up to where they can establish CBDC coins, and the constituents of such countries being able to fully adopt them and welcome them into their country as a solution to such a liquidity crisis. Just my thoughts, but it seems like it would make a perfect avenue for Ripple as well. The world is a stage. To the world is a stage crowd, some additional thoughts for your conspiracy theories. In the Economist article published in the 80s, we find that a world currency being established with a phoenix rising from the ashes of world currencies and embers beneath its feet, with a gold medallion ringing around its head. So, what could this all mean as it pertains to everything that's just been aforementioned? Well, world currencies burning as a result of gold and a phoenix rising, XRP, very likely. What was hanging to the year and date that they anticipated this? 2018. What was NSFR issuances as to its initial anticipated implementation? 2018. When did The Simpsons write their episode 589 by year end? 2018. Just saying. I don't believe it, but maybe some of you do. Thank you for taking the time to watch this video. I look forward to producing more content for you. So if you liked this video, please go ahead and take the time to like, subscribe, and leave any comments down below. Questions, insights, anything I may be missing, anything I may be off on. Obviously, this is just the collection that I was able to put together of various data elements and looking throughout the timeline of sequential events that demonstrate the liquidity crisis that is necessary for Ripple to come onto the world stage. But maybe I'm wrong. I'd love to hear what you have to say. Go ahead and comment down below, and I look forward to hearing from you.